You earlier today discussed intrinsic value, and I'm a big fan of Graham and Fisher, especially security analysis. What differences do you have for calculating intrinsic value versus what was said in security analysis? My second part is, which company do you fear the most? Why is it that no one else has done what you have done? I mean, Coca-Cola has their Pepsi. Thank you.
Yeah, with what you might call private business value. Now, I'm not sure who was the first one that came up with it, but, well, the first one that came up with it was Aesop, actually. But the intrinsic value of any business, if you could foresee the future perfectly, is the present value of all cash that will be ever distributed for that business between now and Judgment Day. And we're not perfect at estimating that, obviously, but that's what an investment or a business is all about. You put money in and you take money out. Aesop said a bird in the hand is worth two in the bush. Now, he said that around 600 BC or something like that, but that hasn't been improved on very much by the business professors now. Now, the question is, how sure are you that there are two in the bush? How far away is the bush? All kinds of things. What are interest rates? But, I mean, Aesop wanted to leave us something to play with over the next couple thousand years, so he didn't spell the whole thing out. But that's what intrinsic value essentially is. And we don't, Graham would say that, Phil Fisher would say that. Phil Fisher would say that in calculating that, he would want to look a lot harder at the qualitative factors of the business in making that estimate of how many birds were in the bush. Graham would say he would want to see the bush, $2 worth of cash in the bush, and to pay $1 for it now. And one emphasized quantitative factors and one emphasized qualitative factors, but neither one would have disagreed with the math. And I started out very influenced by Graham, so I emphasized quantitative factors. Charlie came along and said I was all wrong, and that he'd learned more in law than I'd learned in financial studies and everything, and that I should think more about qualitative factors, and he was right. And Phil Fisher said the same thing. But that's what intrinsic value is about. If you buy a McDonald's franchise, if you buy General Motors, whatever it may be, the real question is, A, are you going to have to put more cash into it after you buy it? But it's really cash in, cash out, when, what discount rate, all the standard stuff. In terms of if I had a silver bullet, what company would I shoot as being a threat to us? I don't see any competitor to Berkshire. I see private equity buying lots of businesses and having an advantage in that they'll leverage up when we won't, and also that presently they can borrow money very cheap and all of that. So, I mean, there are always going to be people competing with us to buy businesses, which is our main occupation for me and Charlie. But I don't see anybody that's got a model or trying to build a model that will essentially go after what we're trying to achieve, which is to buy wonderful businesses from people that care about where their business goes and who generally want to keep on running them. Charlie?
As I've said earlier, I think the Berkshire model, as now constructed, will have what they said in show business was legs. It will go a long time. And I think it will be quite creditable. And I think it has enough advantage that it will just keep going a long time. And I think most big businesses don't. If you stop to think about it, all the great big businesses of yesteryear, how few of them have really gotten big and stayed big. Of the really old businesses, only one stayed big, and that was Rockefeller's Standard Oil. And so we're getting up into a territory where very few people keep going well. But I think we'll be more like Standard Oil than we'll be like ordinary businesses, because I think we will just keep going. We will keep doing what we're already doing, and we'll keep learning from our mistakes. And the people up here are no longer all that important. The momentum's in place, the ethos is in place. It's going to keep going. And if you young people in the audience, I always say, don't be too quick to sell the stock.
Why don't we get more copycats?
It reminds me of our mutual friend Ed Davis. He figured out to do an operation that was so difficult that he operated at the bottom of a dark hole with instruments of his own creation. He gave his own shots by Novocaine, 87 of them while he was operating. And it was a better operation. His death rate was 2% and everybody else was 20. And the other surgeons came to copy him. And they watched him. And they said, well, I don't think I'll try and copy that. I think it looks just too hard to do. There's nothing in an American business school that teaches people to be like Berkshire.
Eddie Davis is the guy that, in effect, introduced the two of us. He was a famous urologist here in Omaha. And
but people didn't try and learn his operation. It doesn't look all that easy. It's very different.
it's slow, too.
And it's slow. It's very slow.
I think the slowness deters more people than anything else.
And the difficulty with being slow is you're dead before it's finished.